Wow, this stream just got so much more beautiful all of a sudden. My God, what happened? Holy
Thank you.
moly.
How are y'all doing, guys?
Great. Before I keep rambling on, let me hand it over to you. So you've had a solid half an hour to digest the earnings. I was just saying
I
that it
need that.
seems like, yeah, I was just saying that it looks like it just, we were all talking about this before. It doesn't seem like anything too crazy, kind of in line with expectations. Well, what are your thoughts?
Yeah, that's exactly it. I hope I didn't interrupt anybody. So yeah, it took me a little bit of time, and there was always five other things happening at the same time. Isn't it crazy? When something's happening, so many other things have to happen at the same, including Elon answering to one of my tweets. I was like, can I believe it? In the middle of earnings. So there we go. So my thought is this has, as is, no impact on the stock price or on anything, right? We're on track. The things that are less than I expected are all explainable. The ramp of the 46, the ramp of the Cybertruck, the money they're pouring into AI. So those were higher expenses than I thought we would expect, but it's for good cause and it's only temporary. Inventory was for me a real good positive, only 16 days. Not that I was ever worried about inventory, but that should really put a whole, I mean, if I see another of those inventory charts from those Tesla Q, I'm just gonna explode, right? So because inventory is not the problem, right? Free cash flow has recovered. Remember 3 months ago, that was my first point when I joined 3 months ago, where I was like, oh, I don't like the free cash flow number. It's good. What I really liked is the lower cost per car. We are on the good way for cost reduction. Energy storage, a bit less, but I mean, Matt can explain to us. I mean, accounting for energy storage is just so complicated, right? The megawatts deployed is a bit lower than I expected. But again, I have no grip yet on how stable energy storage should grow, or whether we just have to account for all those variables from quarter over quarter. What I'm always surprised on is their Forex comments. Like, again, they put it in the negatives, but a couple of lines below, they say, well, in certain countries, it was actually a net positive. So I don't get their currency management. I mean, it's actually funny because 25 years ago, like half my life ago, I started being a currency forex trader. That's how I got into banking. And I look at that and I think I should understand that. And then every time I look at the Tesla financials, I'm like, I don't understand why they're saying it's a negative when I expected a positive, or the other way around. But I mean, there I am. If ever I can talk to anybody there that explains me that, I'll be most happy. But overall, just smooth sailing. What is lower than expected can all be explained with actually, good, solid reasons. And everything else now depends on the earnings call and what they're going to tell us. And I hope that Elon is in as good a mood as he seemed to have been all morning.
Any reactions to Alexandra's commentary from anybody on the call? These earnings, go ahead, Matt.
Yeah, so like, I was just gonna maybe touch on the one point that you posed to me on megapacks. It's like impossible to kind of project how this is going to come quarter over quarter. I mean, I built out like a very detailed model which kind of built in like a revenue recognition lag and how many megapacks would be built versus deployed versus recognized out in the field. But you're just grasping at all those assumptions, and so and if you imagine they're doing some big like 6 gigawatt hour deployment, which they have some that are that size, then when that hits is going to like make it like almost impossible. So I guess my thoughts around this would be like, let's watch like the trailing 12-month trend over time and like see how that kind of looks, because it should be incredibly positive. But this, quarter over quarter lumpiness is just impossible. Like I really understand this stuff, and I still we don't have enough information to get there. One other thing I noted, Farzad, you were asking about that other income line, how that was like, what was it, like
Yeah,
200 to 300 million?
320, I think.
Yeah, so they have a note in here that says other income below operating income line was positively impacted by FX movements on certain intercompany balances. So that's kind of a strange one. I'm not sure what was driving that. I mean, that could be one Tesla Q kind of picks apart as, oh, you're artificially inflating your business, but it's like, okay, $200 million, like go find something else to complain about.
Yeah, and didn't you like the fact that we're now close to 25 billion of sales? I mean, this is just such a horrendous number. This morning I retweeted somebody who said, well, they're looking forward when revenues will be 1 trillion per year. And then I had obviously some people saying, oh, it's already no, it's close to 1 trillion in market cap, not in revenues. So if we extrapolate just this quarter, which obviously is only Q2, Q3 and 4 will be higher, but that would mean 100 billion. So 1 trillion will be 10 times that, and we'll get there. There is no doubt we'll get there. But it's just it gives me a lot of baume on my heart. Sorry, I stopped speaking French, getting all these emotions. But the 25 billion I think is a real good milestone. I mean, it's a really important milestone, and we should celebrate it.
Did we also talk about interest income is continuing to increase? Was that something we hit on to 8 million?
Yeah, and I think they went heavily into T-bills again. I have that somewhere. Let me find it.
I would say, while she's looking that up, that's not necessarily a huge surprise. I mean, just it's mostly a function of their cash balance and the higher interest rate environment. So that's why we've seen it really kick up in the last couple quarters. So nothing that's a surprise, I don't think, for this quarter.
Exactly. I mean, it went from barely 3 billion to now close to 3.5 for everything that's cash equivalents investment. So that's all that short-term stuff. And I mean, short-term rates are still quite important. And we did move up by nearly 1 billion in cash reserves. So I do believe that's the reason why it was well managed. I also felt, wasn't it, that accounts receivable went down a little tiny bit. I mean, nothing really important. There was a question this morning actually on Twitter, what happened to those 700 and something million that that Reuters announced were given back in stock options. I think these were there. I didn't have the time really to find where they should be. If I understood it right, it should be in the operating expensive where they reappear. I'm not sure where they are. So I want to have to dig a little bit further to understand. Didn't you love that second Cybertruck image? The one in the dirt? I was like,
The one thing that the wiper doesn't go all the way. It doesn't cover like 1/3 of the windscreen.
Did you talk about the missing door?
Oh yeah, Doorgate. We talked about Doorgate.
It is, right?
Yeah.
Where's the door? Where is the wiper?
So funny. So what I'm doing right now is I'm just putting all the numbers into my spreadsheet just to make sure they all align.
Yeah. So Farzad, while you do that, and I got all these brilliant people on here, there's been I don't want to call anyone out, but there's been someone who's very reputable in this type of space, financial YouTuber, who has talked about Tesla needing to go back to the capital markets. And I was partly talking to like James Stevenson to better understand this, because to me, it doesn't seem like they have to, from everything that I understand. He seems to agree. Tesla, in the earnings call or in earnings report, they say that they have enough cash to fund everything they're trying to do. So, with Alexandra and Matt, could you help me understand what I might be missing on that front? Or if you have no idea what I'm talking about, we can just move on.
I don't know who you're talking about, but let me address what we have. So we have now 23 billion in cash, right? I know there was another, maybe it's the same YouTuber going on. Yeah, but that's only temporary cash because they have all these obligations to pay their suppliers. I mean, that's crap, because there's constantly money coming in and coming out. So this is just, holding it at one moment, and that's 23 billion. So you can't just take this 23 and deduct all the rest, because by the time you deduct all the rest, there's more money coming in. So just don't get confused by that. That's the first one. The second is last quarter, I think it was, they had that new credit line. Maybe wrong, remember that, but I think it's with Citibank now, right? I think it was with Deutsche Bank and they changed it to Citibank. So that's a credit line that they can pull at any moment. Obviously, at the moment, they are not. I think it was very wise to have put that in place, and it was at stellar, more than AAA conditions. The third thing they are now looking at, what came out last week, is doing an asset-backed security. They've done an asset-backed security before. What is that? That is a pool of all the leases they currently hold, and taking it out of the current balance sheet to put it into that asset-backed security that then the market can purchase, or even retail investors can purchase, so that it's off this balance sheet. And then so the risk is not with Tesla anymore. I think that's actually a very clever move. Why? I've discussed this before. I think Tesla, sorry my English, pissed off a couple of banks by lowering prices so radically. Why? Because a bank has lended, let's say 6 or 8 months ago, for a car at a certain price, asking the owner of the new car to put down whatever, 5%, 10%, 20%, and taking the rest on the bank's books. When then suddenly the prices of all these models dropped abruptly, the bank has an issue. The bank needs to readjust their books, because now they're holding suddenly 100% of the car value. And they're having this loss. And a lot of banks don't like that, because they have to readjust if they don't do it linear. And if they do it linear, well, then it becomes untradeable. So by doing this asset-backed security for leases, and they may actually be able to do it also for car loans in a second time or in the same vehicle, I have to look into it. But that is to be able to circumstance those banks that are less willing to finance Tesla cars just because they have it in the stomach at the moment, to be able to direct these, to first take them on their own balance sheet, but then to direct these into these asset-backed securities. So none of this is bad credit risk for Tesla. Actually, all of it is Tesla being treated as a AAA entity by these banks, by these swap desks, and whoever else puts these up. So don't get confused with the old rating agencies trying to tell you something else. This is really what shows the stellar financials and situation that Tesla is in.
And
Matt, you want to add something?
Still have a negative cash conversion cycle so that they're actually getting paid for their vehicles before they're paying all their suppliers for parts?
I think so, right? I mean, I don't know how long, with 16 days of inventory, I don't know whether that is still as favorable as it was in the good old days. But I mean, 16 days is short, and usually I think they have 30 days to pay, right?
Yeah, I think it's got to be because if as you continue to grow, if you're generating operating cash flow while you're growing top line, that means that implies a negative cash conversion cycle. So I would suspect that has to be the case.